Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy. Now, if you follow the channel, you'll know that I've posted lots of videos talking about Russia, and I'm constantly asked the question, how does Russia keep funding the war in Ukraine? Where is it finding all of the money from? And in today's episode, I want to talk to you about a report that's been published by an associate at Harvard University, which claims that Russia is using secret debt to fund the war in Ukraine. And over the past 2 years, it's built up around $250 billion worth of governmental guarantees to guarantee debt to corporates that potentially are insolvent or potentially on the verge of bankruptcy. And if all of this debt comes home to roost, then Russia will find itself in a very difficult situation, both from a strategic point of view and also the economy could be on the verge of some form of recession and collapse if the banks who are providing all of those guarantees call up the guarantees and force the government to pay over cash that it doesn't actually have. So let's get started and have a look at the details on this report. The report, entitled Russia's Hidden War Debt, was published in January 2025 by Craig Kennedy, who has a doctorate from Harvard University in Russian and Middle Eastern history and a master's from Oxford University, and is currently a Centre Associate at the Davis Centre of Harvard University itself. Now, before we go on any further today, I want to talk to you about investing.com, who I've partnered with for today's video, and it's the go-to financial site that a lot of us use on a daily basis. And if you subscribe to investing.com, it gives you access to Investing Pro. And Investing Pro is a powerful AI-driven tool that can give you access to lots and lots of financial data and information at the click of a button. If you're looking for ideas, Investing Pro gives you the portfolios of legendary investors such as Warren Buffett at the click of a button. You can see all of the different stocks that he's invested into if you want to copy that strategy. But one of the features that I really like is Pro Picks, which gives you AI-driven strategies that have consistently outperformed the S&P 500. And for each stock, you get comprehensive stock information, including pro tips, which are bite-sized actionable insights that translate complex financial data into easy-to-understand observations, so you can quickly identify bullish and bearish signals without drowning in numbers. And the brilliant news is that I've managed to get a special discount for you, so you can get Investing Pro at the lowest price. So click in the description below to subscribe and start using Investing Pro today. And before we go on to look at Russia's hidden debt, I thought it was worth having a look at the official amount of debt that the Russian government currently has. This chart shows the movement in Russian governmental borrowing over the past 3 years. And the scale on the right hand side of this chart is shown in trillions of Russian rubles and goes from 14 trillion at the bottom to 22 trillion at the top. And to keep things simple, if you think about $1 equating to 100 Russian rubles, you can divide by 100. So 20 trillion Russian rubles equates roughly to $200 billion. And what you can see here is that between May 2021 and September 2022, the amount of government debt in Russia was relatively stable at around 15 trillion Russian rubles. However, from October 2022 onwards, you can see that there was a sharp increase in the amount of governmental borrowing. And the most recent figures, which were published in April 2024, so almost 12 months ago now, this data is quite out of date because the Russian authorities decided to stop releasing information to the West. They didn't want the West to know the details of what was going on in the Russian economy. But the data for April 2024 showed that the debt had increased to around 21 trillion Russian rubles, or around $210 billion. Now, in terms of explaining what happened between October 22 and April 24, this was the period when Russia decided to convert its economy into a wartime economy. So lots of companies within Russia were commandeered to help with the war in Ukraine. So they were instructed to produce things that were needed to keep the war effort going, and those companies were effectively being sponsored directly by the Kremlin. They were being given contracts to produce things, and those contracts were being paid by the state. So that's why the state had to take on more and more debt to fund all of those payments, as well as obviously funding the war in Ukraine itself, and also having to fund gaps in the economy as the sanctions started to hurt the Russian economy and it started losing income from the sale of things like oil and gas. Now, as I said, the Russian authorities haven't published any data for the last 9 months, so we don't know what's happened to Russian governmental debt over that period. But if you follow the trend of this chart and also take account of the fact that things have got worse in the Russian economy over the last 9 months, it's highly likely that the amount of government debt has increased significantly and could now be somewhere in the region of 300 or 400 billion US dollars. This chart, taken from the Russian Hidden War Debt paper, shows the movement in corporate credit in Russia between the start of 2017 and October 2024. And the scale on the left-hand side of this chart is an index and goes from 95 at the bottom to 145 at the top, and the base level of 100 was set in January 2017. And what this chart shows is that in the 5 years between January 17 and January 2022, which was the month before the invasion of Ukraine started, there was a gradual increase by the amount of corporate loans taken out by Russian companies. And by January 2022, the index had increased to around 107. So that represents a 7% increase over a 5-year period. Now, interestingly, immediately following the invasion of Ukraine, you can see that there was a sharp fall in the amount of corporate credit. And this was partly as a result of the fact that overseas lenders pulled out of the market immediately. So we saw any overseas banks that had a presence in Russia announcing that they no longer wanted to increase their exposure and that they wanted to exit from their situation in many of those cases. And by July 2022, the index had fallen below 100. So the amount of corporate lending in Russia at that point was less than it had been in January 2017. However, as you can see from the far right-hand side of this chart, between the summer of 2022 and October 24, there was a massive increase in the amount of corporate borrowing in Russia. And by October 24, the index had risen to almost 145 points. And as you can see from the annotation, that represented a 71% increase in the amount of corporate borrowing, which equates to just under 20% of Russia's total GDP. So that is a significant amount of additional debt that's been taken on by Russian companies over the last couple of years. This chart looks at the increase in corporate borrowing in Russia between July 22 and October 24 and compares it with the increase in government borrowing, the increase in the defence budget, and the increase in oil and tax revenues over that same period. And we've got two different scales here. On the right-hand side, we've got a percentage scale from 0 at the bottom to 100% at the top. And on the left-hand side, we've got a scale showing trillions of Russian rubles. So if we start off by looking at the increase in corporate borrowing, which is shown by the red bar chart, you can see that that increase equated to around 35 trillion Russian rubles, which is roughly around 300 billion US dollars. And if we look at how that compares to the increase in governmental borrowing, which is shown by the small grey bar on the far left-hand side, you can see that governmental borrowing only increased by around 5 trillion Russian rubles over the same period. So the total increase in governmental borrowing over this period was only around 15% of the increase in corporate borrowing. Corporate borrowing was 6.5 times higher than the amount that the government was borrowing. If we now have a look at how that increase in corporate borrowing compares to the increase in the defence budget, which has obviously gone up significantly since the war in Ukraine started, you can see that the increase in the defence budget was only 54% of the total increase in corporate lending. The increase in corporate lending was almost 2 times higher than the increase in the defence budget. And if we compare the increase to the official published figures for oil and gas tax revenues, you can see that the increase in corporate borrowing was 1.4 times higher than the increase in those tax revenues. So what is going on here? Why has there been such a rapid increase in the amount of debt that corporate entities in Russia are taking on at a period when the country is in a war and the economy has been struggling? It doesn't really make any sense at face value. However, this chart starts to put things into perspective because it gives us a breakdown of the different sectors where the increase in corporate borrowing has been seen. The scale on the left-hand side of this chart shows the percentage increase and goes from 0 at the bottom to 70% at the top. And we've got 5 different bars on this chart. The first 4 is the breakdown of the different sectors, and then the 5th one on the right-hand side shows the total increase. And as you can see, we've got 2 different colours here. The red section shows companies that are directly related to the war, and the blue sections show other sectors that may actually also have some sort of link to what's going on in the war. So if we start off with a sector that's clearly related to what's happening in Ukraine, arms manufacturing, you can see that there's been a 15% increase in the total borrowing from companies within that sector. There was a 30% increase from companies in research, engineering, technology, logistics and metallurgy, a 20% increase from companies in construction and transport, and an 8% increase from companies in metal mining and petroleum refining. And the bar chart on the far right hand side shows us that 73% of the total increase in borrowing in Russia by corporates has come from companies that are related to the war effort. So what we are seeing here is that companies that are in the war economy who are being funded by the Kremlin are actually being given preferential loans. The government has signed off with the banks that these companies can borrow as much as they like. And therefore, a lot of these companies are being funded by debt that's being sponsored by the Kremlin. Now, if you've been following the channel, you'll know that over the last 18 months, there has been a significant increase in interest rates in Russia. And currently, interest rates are running at 21%. And obviously, that makes it very difficult in terms of if you're borrowing lots of money from the bank, it means that all your interest payments are getting larger and larger. This chart shows the movement in the official rate of interest in Russia over the past 3 years. And as we've just discussed, the rate has gone up from 7.5% in the middle of 2023 to the current level of 21%. And the reason why the Bank of Russia has done that is because inflation has been rising and they've been trying to bring it back under control to get it back under 4%. But the problem that this is now causing in the economy is that the cost of borrowing is very high. It's prohibitively high for most companies and individuals. You don't want to take on debt if you're having to pay back 21% interest or even 25 or 30% if the bank is applying some sort of profit margin over and above the official lending rate. The increase in interest rates hasn't been holding back corporate lending in Russia. Now, this looks very exciting, this chart, so let's break it down and work out exactly what's going on here. On the left-hand side, we've got the annualized growth rate, which is a percentage going from 5% at the bottom to 35% at the top. And on the right-hand side, we've got the official rate of interest. And that scale goes from 6% at the bottom to 22% at the top. So if we start off by looking at the grey line, you can see that that is basically the chart that we've just looked at. It's the movement in the official rate of interest between June 22 and October 24. So you can see that the official rate of interest has been rising rapidly over the past 15 months or so and is currently sitting at 21%. If we now have a look at the black line, which shows the year-on-year percentage movement in consumer borrowing, so that's borrowing by individuals like you and me, you can see that between July 22 and October 23, there was a sharp increase in the amount of consumer borrowing, and that corresponded with the reduction in interest rates down to 7.5%. And while 7.5% is still a high level of interest, it's a lot less than the 20% that Russia increased its interest rates to immediately following the war in Ukraine. So as the rate came down, lots of people started borrowing more money. Now, as you can also see from the black line, between October 23 and February 24, there was a sharp fall in the annual increase in consumer borrowing. And this corresponded with the sharp increase in interest rates. People decided that borrowing was getting too expensive. Now, interestingly, there was a recovery in consumer borrowing between February and July 24, when mortgage subsidies were offered to try and kickstart the property market. However, as you can see, between July 24 and October 24, that percentage started to fall rapidly again as the mortgage subsidies were withdrawn and interest rate rises continued to hurt borrowers. If we now have a look at the red line, which shows the year-on-year movement in corporate borrowing, you can see that between August 22 and August 23, there was a rapid increase in corporate borrowing, and this, not surprisingly, coincided with that period of lower interest rates. It was more advantageous to borrow at that point than it had been previously when interest rates were sitting at 20%. However, what you can also see is that between August 23 and February 24, there was a sharp reduction in the amount of corporate borrowing, and this coincided with that rapid increase in interest rates. Interest rates started to get more and more expensive, and so corporates pulled back from taking on more debt. However, if you look at the right-hand side of this chart, you can see between February and October 24, there was a rapid increase in the amount of corporate borrowing, And this coincided with that rapid increase in interest rates. And that is slightly counterintuitive. And the big question is, why were companies taking on more and more debt as it was becoming more and more expensive? And the answer to that question is because those loans were being guaranteed by the state. The banks were being instructed to give that money to the companies that were helping with the war effort, and those companies didn't have to worry about what the interest rate was because the loans are guaranteed by the state. And this is where the concern is now rising, because we've got lots of corporates in Russia that potentially are insolvent. They haven't got enough money to actually pay all of their costs, so they're borrowing money to pay for their costs, and they're borrowing it at very high rates of interest, and this is all becoming a really big credit bubble. So what's the summary and conclusion today? Well, I wanted to post this video because the big question that everybody's always asking is, what's going on in the Russian economy? Why hasn't it run out of cash yet? If it's got reducing income and increasing expenditure, surely at some point you have to run out of money. And I think what we've seen in today's video is that isn't always the situation. If you think about your own personal situation, if you had an unlimited bank loan, if the bank would constantly give you more and more and more money, you could just keep spending like there was no tomorrow, because it doesn't matter. You just keep getting more money from the bank, you spend it, you get some more money from the bank, you spend that, you get some more, you keep spending. And unless the bank actually turns around and says, we want our money back, we're going to make you bankrupt if you don't pay all the money back, you can just carry on forever if they didn't do that. And that's really the situation that we've got in Russia. What we've seen in today's video is that over the last 2.5 years, there has been a huge increase in corporate borrowing in Russia. And this is basically not shown by the official government figures. The government debt figures that we saw earlier in the video, which actually only go to April 24, so they're almost 12 months out of date, shows that there has been a huge increase in governmental borrowing in Russia since the war in Ukraine started. However, we don't have any latest data to see where that figure has got up to. But what it doesn't show is that we've got all of this secret debt, this hidden debt, which is being provided by the Russian banks to Russian companies that are helping with the war efforts in Ukraine. And the reason why the Russian banks are comfortable doing that is because the Kremlin has given them guarantees. We've got preferential loans that basically represent no risk from the bank's point of view, because if that corporate borrower doesn't repay the money, then they can get repaid directly by the state. But the big issue here is obviously this is very circular. It's extremely unlikely that the Kremlin is going to encourage the banks to call in any of those loans, because if it did so, it basically would have to pay the money directly to the banks itself. So those banks will just be encouraged to keep increasing the loan. Why would they call it in if everybody's on a winner? You just keep providing more money, the company spends the money, you rack up more interest, you can show more profit on your balance sheet. Now, in terms of what's going to happen when the merry-go-round stops, if the war in Ukraine suddenly finished tomorrow, and so the Kremlin didn't need all of those companies to keep producing things for the war effort in Ukraine, then you would expect that the banks would say, okay, you've lost your guaranteed income, you've got this huge amount of debt, please repay us. Obviously, those companies, if they did lose those contracts, would actually lose a huge amount of profit. And they've got all of this staff that they built up over the last couple of years. So those companies would be in a downsizing situation. They'd have to cut their costs, they'd cut in their income, therefore their profit would go down. And realistically, they wouldn't be in a position to repay any of these bank loans that they built up. So what we've got here is a potentially huge bad debt situation that's building up in Russia. Now, whether or not it will actually ever materialize is a big question, because why would the banks call up that debt if they know that the borrower is not going to repay? Yes, they've got a guarantee from the Kremlin, but do these banks really want to go to the Kremlin and say, you owe us hundreds of billions of dollars? Now, obviously, the companies could go bust, the banks could enforce, they wouldn't really get a great deal back on that because there are no international buyers to step in and buy it. You'd only get other Russian businesses wanting to buy it. So you could see a real implosion in the Russian economy at that point. So the banks won't really be encouraged to do anything about it. And I think what we're seeing here is a situation similar to what we've been talking about in China for the last few years, where the banks have huge loans out to all of these property development companies, but nobody's actually taking any action. These are just zombie loans, zombie companies, everybody's sitting tight, not doing anything because they don't want the whole economy to collapse. And I think that's what we're seeing in Russia right now. We've got lots of companies that are potentially not creditworthy, potentially insolvent, building up bigger and bigger debt facilities with the banks that are being sponsored by the state. So the banks know that they're not going to go bust, but essentially the Kremlin will have to fund all of this. And if all of this moved to the governmental balance sheet, it would more than double the amount of debt that the Russian government has overnight. And obviously, they don't want that to happen. So the overall summary of today's video is that what we are seeing is the debt bubble in Russia is getting bigger and bigger. All the companies that are related to the war effort are able to get guaranteed loans from the banks. That means it's easy money. That's how they're funding a lot of their expenditure. And I think that answers the question as to how is Russia continuing to spend all of this money when its income is falling. We've got the wealth fund, which is being dipped into, and we've got the banks that are providing more and more cash against the guarantee from the Kremlin. But at some point, if somebody pulled the plug and had to ask for repayment on all of these loans, the companies wouldn't be able to fund it. The Russian state would have to make good all of these bank loans, and that would increase the amount of Russian debt hugely. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.